Restaurant business Cava joined the public markets last June, and many investors think it could be the next Chipotle. At the current price, Cava has a market cap of $7 billion. It's got $332 million of cash on its balance sheet and no debt, so the enterprise value is $6.7 billion. Cava opened 72 restaurants last year and grew revenue 29% to $729 million. Net income was $13 million and adjusted ebitda was $74 million. So Cava is now valued at an eye-popping 9 times revenue, 500 times earnings and 90 times ebitda. That sounds like a high valuation, but Cava's Mediterranean fast casual dining is booming, and Cava looks very similar to an early Chipotle, which has been one of the best performing stocks of the last 20 years. Back in 2002, Chipotle operated 222 restaurants. It's now got over 3,000 with annual revenues of almost $10 billion. Cava currently operates 309 restaurants and plans to get to 1,000 by 2032. Back then, Chipotle's average restaurant adjusted for inflation generated roughly $2.1 million in revenue, which is a little less than Cava's current average. The companies share a similar assembly line operation, and same restaurant sales growth for the two firms are also very alike. However, the comparison with Chipotle also highlights a major problem for the stock. It's taken Chipotle 20 years of impressive execution to get where it is now, an $80 billion valuation. If Cava does become the next Chipotle and achieves the same valuation, Cava's stock would only return about 12% annualized from here. Those are obviously good returns, but they require that Cava becomes one of the best restaurant chains in the world, just like Chipotle did. That kind of result isn't guaranteed. The industry is littered with chains, particularly in fast casual, and that wasn't the case when Chipotle was getting started. And a lot of Cava's growth has come from the acquisition of another fast casual wannabe, Zoe's Kitchen. Cava's strategy to convert existing Zoe Kitchens to Cava's was a sound one, but the company converted its last store last year and it now needs to source locations itself. Assume Cava does hit its target of 1,000 stores by 2032, that would put annual revenues in the region of perhaps $2.8 billion. Assume a similar profit margin to Chipotle and Cava could be making around $340 million in net income by that time. A 30 times multiple then takes the market cap to $10.1 billion, which works out to an annualized return of only 4% a year. And even that return looks on the optimistic side. There's no shame in Cava not being the next Chipotle, but there's a problem when the stock is priced like it will be. That's why I give Cava a negative rating, but these are my personal opinions, not financial advice, and I may short the stock in the near future. For more investing videos, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.